Hey guys, welcome to the Green Rock Properties podcast. I am Jordan Surrett, and I know that last time we promised you that we would have a mortgage person here. So I have with me today Jeff with Movement Mortgage. Say hi, Jeff.
Hey, Jordan. How you doing?
I'm good. Yourself?
Doing well.
Good.
Doing well.
How was the drive?
Good. If you can avoid all the trucks.
Nice. We've been talking about the last few podcasts is the big emphasis on rates. And I know you and I were kind of talking about rates earlier and kind of how you are able to watch kind of what the bond market is doing and how that might kind of trend one way or the other to be able to help our clients to make the right decision. So can we kind of go back to that and kind of elaborate on that and what you can do and all of that?
Sure. Thanks, Jordan. A lot of people, like if they have family members, that have been around and bought houses and financed loans, remember the days that you could call up and say, hey, what's your rate?
Yep.
Well, those days have been gone for a long time because there's a lot of factors that come into play as far as like how you come up with a rate for an individual. A lot of it is credit score, it's loan amount, loan purpose, loan type, term, things like that all come into play. And that's part of the analysis that we go through to actually price a loan for the rate on an individual basis.
Sure.
So that's a lot that goes on today. And, we don't want to try to confuse people in all that, but it is customized per individual. So you can't just go like, hey, what's your rate? And know that it's, the same for everybody because it doesn't apply anymore.
So let me ask you
this.
this.
A long time. Yeah.
What's your rate today?
Exactly.
And what I mean by that,
Yeah.
so what are you seeing in the market? Like, so I know that you and I both watch rates very religiously and kind of pay attention to which way we're going and kind of what's going on that's going to potentially affect that, whether it's the Fed or the stock market or all of that. So where do you see them compared to where they are right now to where they might be going in the next week, 2 weeks, 4 weeks?
Well, great question. What drives rates right now is inflation. I mean, when you run into the negative headlines about inflation, the rates are going to fall right along, with that. I've been around the industry for about 21 years. And I can remember when I actually got into real estate before I moved into lending 21 years ago, the rates were falling from 17%.
Jeez.
Exactly. Now, the difference between today and then really had a lot to do with the price of the homes. Price of the homes were much less then, and the rates were a lot higher. Now, price of homes are considerably higher, but the rates go with it.
So 23 years, you said?
I've been lending about 21 years.
21 years. So early 2000s.
Yeah.
Okay.
Yeah, exactly.
So not that long ago, relatively. I mean,
No, but the funny thing that I find with people nowadays, if you look at how long they've been tracking mortgage rates, and I believe it goes back to about 1954, right around that window. And it's from a report, it's called FRED, F-R-E-D.
Right.
Okay, so the FRED report will
see the graph.
Exactly.
I look at that pretty regularly.
Exactly. So if you tell somebody that rates are, say, 6.5% to 7.5% range, well, we pretty much worked in that range for a long time.
Sure.
This is pretty normal.
And so
really.
I got my real estate license in 2006. Yeah. So I remember the shifts in rates and the mortgage collapse essentially of 2008. Everybody calls it the housing market, but it was more the mortgages than anything. So the average rate is very low compared to what it has been.
Oh, it is
in recent history.
It is. It just doesn't feel that way to anybody.
Right, 100%. Because
it depends on an age group, really.
Sure,
because of experience level.
And we were just talking about COVID. So during COVID, rates are 2.5%, 3%. So everybody all of a sudden thinks that that's the norm, and then we get into 4s and 5s, and people start freaking out, and now we're floating around 7, and it's like. ultimately it's not that bad because we have seen rates again in recent history in the 15 to 20% range. And that would be unheard of. That would cause so much disturbance in the housing market these days.
I would shudder to think of what would happen then.
So let's talk about CPI.
Yeah.
So CPI came out last Tuesday, and it hit a little bit harder than what the estimation was. So where do you think we're going from there?
Sometimes the numbers that come out, as far as the gurus that we, follow, and we, like I do, I pay money, to a service,
Sure.
To allow me to follow the bond market all day long.
Sure.
So, when I'm sitting there at the office and you call me or anybody else, I'm looking to see what's going on in the bonds that day, what the data is that comes out that says something like CPI and what is driving the rate. And it's minuscule sometimes what will change the rate.
Sure.
And it will just absolutely go bananas sometimes as a knee jerk, and then it may pare back throughout the day, like maybe after lunch or whatever, but not always. So again, minuscule number changes can actually cause a spike in the rate, and it may take some time, days, before that rate might settle back down again.
And we're talking minuscule number changes in the way of like mortgage-backed securities.
Exactly,
bonds.
in mortgage-backed securities, which people don't really understand, but mortgage-backed securities is what drives rates.
Yeah.
I mean,
you say mortgage-backed securities,
Exactly.
and generally you get the glazed over
Yeah,
look.
I know. Because
I lost you.
people are so used to looking at the stock market or seeing, the bond information on, everything from CNBC to, Yahoo, whatever. I mean, just places like that.
Sure.
Well, it's not the same thing.
Yeah.
It's
And
definitely not the same thing.
And it's always the sensationalized article that gets overblown from some guy that's sitting in a back office writing the article. And, they talk to experts, and then they come out and they write this article and they have no idea what they're talking about what's actually going on behind the scenes as far as, the bond market.
It is so frustrating.
Yeah.
There are people that will say, do you think it's a good time to buy? Let me say it and be very clear about this. It's always a good time to buy. Always. You're not saddled with that interest rate or that loan the rest of your life.
Yeah.
You're not. You can refinance out of it.
Sure.
Okay.
And that's what we tell our clients. But so on the reverse side, and I know you might not like to hear this, but there's a lot of builders out there that are offering buy downs if you use their mortgage company. And you might get a 4.99% interest rate or a 5.875 or something like that. However, say what you want to say about that.
Yeah, because Movement Mortgage is a preferred lender for many, many builders.
Sure.
Many. And I'm on the preferred builder list of some as well. Okay, one in particular, they offer $10,000 in seller paid contribution
that you can use towards closing costs
to lower the rate.
or
I just
a rate
did
buy down.
a VA loan, paid $10,000 towards closing towards buying the rate down. The guy wanted the rate bought down permanently.
Sure.
They used almost every bit of $10,000. I think less, say $225.
So let me ask this: with $10,000, how much did that on that particular one? How much did it buy the rate down?
If I'm not mistaken, I think he's at 5.25.
Got it. And the market rate at that point was.
Oh, he would have been more.
Seven-ish?
Yeah, he would have been more like that.
Okay.
And then there's another one I just.
So he bought it down about a point and three
yeah.
quarters
Oh, yeah.
with $10,000.
And the last lady I closed on Friday, okay, the builder offered $10,000, and she could go to an outside lender and get $5,000. I priced her at 4.99. The builder's lender priced her at 7.99. The rebate back to the lender was about $5,000, meaning they were still making money, but she got a lower rate with me
Wow.
going to an outside lender.
Huh. So tell me a little bit about that. So I know that when you're using builders, and every circumstance is different. And,
That's correct.
And
It
every
is.
every
It
loan,
is.
every house, every situation, every, you might not have money for closing costs. You might
That's
not
true.
have money for a down payment. There's all these different possibilities. But in the case that you are going up against a builder's lender, what might you see in that situation, and how can you kind of mitigate it, I guess, on your side to make it more fitting, and what's the cost on each scenario?
Yeah, I mean, it never hurts to just look and compare. Remember, some of it is you're also looking for somebody that's going to look after you, that's working on your behalf.
Absolutely, every time.
Same thing as buyer agency was for the realtors.
Yep, is.
It's still correct. Yes. Sorry. Thanks for. Yeah. You're yes. Still is. So in lending, we may be able to compete with a builder's lender, and we may not. This is just one opportunity that presented itself. I can't always do that.
Yeah.
But whenever it presents itself, then it becomes sort of like headlines.
Yeah.
It's like, wow, we were actually able to do something like this. And that's one opportunity. But the previous one of the low 5% range, that's just the money that the builder paid. They don't have their own in-house. They have
Got it.
They have two preferred lenders. I'm one of the two, and we just happen to price better. If the lender works for the builder, you might think of that a little differently.
Yeah.
So I don't know.
There's builders, especially in our area, that have the different. Sorry, a little adjustment here.
Sure.
That have the different companies that are actually kind of under. It's not the same company, but it's kind of under the same umbrella.
Right.
So they're kind of taking a little bit from here and taking a little bit of here, so they can do a little bit more. But from what I understand, sometimes they kind of front load those costs. So you are able
into the sales price.
You are able to kind of get that adjustment and still get within that range that might over time be less of a payment or whatever that might look, maybe less closing cost or something like that.
Oh, absolutely, yeah. We didn't talk about this one, but I spent shy of 20 years working in new home sales. So I worked for new home builders from the early 80s until I made the transition into lending.
Nice.
So very familiar with having a list of preferred lenders, and so on. And, but that was back in the day that you literally faxed. Yeah, I'm that old.
I remember that.
They faxed the current rate out on a Friday.
Wow.
For you to have that information in the model home.
And so let me ask this. Was that good for a week? I mean, if you got it on Friday, was it good for the following week? Or
No,
did you
come Monday morning when the rates came out, that rate was different.
Oh, okay.
In a lot of cases. Not every time, but it just depended on the market.
So see, when I first got into real estate, now everything is, way more, technologically advanced and all of that. But when I got into real estate, instead of being able to use our phone to open a lockbox or, get an appointment or like whatever, we had the weekend book. And it was all of our listings for the weekend. And you go in and, somebody calls and you're on call. The phones are forwarded to you. We did have cell phones, but, it was the flip phone or my Nokia red plated, front thing that you could not break in any situation.
Yeah.
I actually dropped that phone into a river once and it picked it up and it's fine. If I drop my iPhone into a river, it's gone.
Yeah.
But, so we had the weekend book. And so, they would call the office. It would route to your number. You would answer the phone, so-and-so company. And then they say, hey, we're calling about your listing on 123 Main Street.
Yep.
Well, let's flip to the book and figure out what it is. Okay, well, what do you want to know about it? Okay, it's a 3-bedroom, 2-bath, quarter acre, half acre, whatever it is. And then, do you want to see it? Well, yeah, I've got to call the owner now and figure out, when we could see it.
Schedule an appointment. Yeah.
And then, to get into the lot box, luckily we still had the same lot boxes, that we use today, but we had this little black box that you had to charge every night, and it was plugged into the phone line, the landline, and it would update every night through the phone line. And if you didn't charge it, then you get 1 day. You get 1 day of not charging it. But on that second day, if you haven't charged it and it hasn't updated, you can't get into that lockbox. So things have come a long way in the history of the real estate world.
I remember when it was a long, weird-looking key that you had to have to get in there.
What?
Yes, sir. They had a very strange-looking, key that got in lockboxes.
Interesting.
So, yeah, I've been around this industry a long time, seen a lot of changes.
So truly the master key for all the houses, huh?
Literally. Yes, sir, it was.
Interesting.
Yeah, so, again, back in the day, you could call up, hey, so-and-so, what's your rate?
Yeah.
And that was a valid question.
Yeah.
And it's evolved into something completely different. But at least the consumer can take away and know that they're getting the lowest and the best pricing that is unique for them.
Sure.
It's personalized.
Yeah.
Now, it's not that people should think that they're being taken advantage of, because there's still such a thing as called competition.
Sure.
It's out there. But the playing field has been leveled quite a lot more.
Yeah.
And in what I mean by that has a lot to do with this. If rates are similar, like going and buying gas, what's important to you? I've literally had this scenario happen. I've had people say, about the gas scenario as far as comparing rates. They'd look at a gas station that had the lowest price and they go like, yeah, I don't feel safe over there. Or maybe there's water in the gas or whatever.
Sure.
And it's cheaper than everybody else.
Yeah.
And then you've got somebody, and again, this is a real story. I won't mention the name, but there's a very large name gas station. Well, they had a problem a long time ago, we'll just say, with the environment. And they're known for having a high-priced gas. Now, I'm not saying it's better or worse or whatever, but this particular person had a problem with that particular company, and they were never going to buy gas from that company because of an environmental hazard situation many years ago. And then there's some people that are sort of middle of the road. And what I mean by that, where I mentioned I stopped when I came to your office that's across the street.
Yep.
Okay. Now, my wife loves that particular gas station.
Same.
Okay. Why is that? Okay. Well, the price of the gas is similar to many others.
Sure.
But what separates them from the rest? Okay. You walk in there.
Quality, level of service. They talk to you when you walk in the door.
All that.
They have a huge selection of options. If something goes wrong, they fix it immediately. They're clean. They're nice. They know what they're doing. They're efficient.
All of that. See, all of that. So you're saying that service sells.
Absolutely.
Okay. And product sells.
Absolutely.
You can go there to get everything from regular to, the higher, range of gas, but they even have non-ethanol gas.
Sure.
So you're going to find all of the people that do landscaping going in there, because any ethanol ruins those smaller engines. Exactly. Yep. You learn stuff like that. So anyway, Movement Mortgage is a lot the same way. Many product available to the consumer. We try to fit everybody into everything that you would need. I mean, we don't have everything, but we've got more than probably most.
Yep.
Do we use it all? No, but it's available because we're trying to provide a service to as many people that are looking for a mortgage that we possibly can. Okay, the other thing is, I'd really like to say that we hang our hat on one of the most dominant things is the service aspect of it.
Sure.
We actually underwrite the loan before we process it.
That's huge. That is so huge.
Thank you. I came from an era that we did not do that. So when you underwrite the file before you process it, all you do is process it to specifically what that underwriter wants. Not let's just cover the whole thing, and maybe we don't need all that.
That way you can set expectations with the client. Listen,
Yes,
this is what we're going to need. This is what we're going to need to show. This is what we're going to need to do.
Exactly.
So that there's, I'm not going to say no surprises, but as the minimum amount of surprises, because there's always something that comes up, right?
That's true.
We just saw that you had a a lien on your property, 10 years ago or whatever. Like we just need this documentation that it's been cleared up or whatever that, looks like.
That's true.
So, I mean, there's always going to be some kind of surprise. There's always going to be like some, we need to take care of this. But if you pre-underwrite it, then you kind of already know, kind of the trajectory and what you're going to need, during that transaction.
This is true. I mean, that's everything you just said. It is. If you try to ask for too much, it can tend to frustrate a borrower, and that's the last thing we want to do.
Sure.
We want to make sure that they're happy and to do the best job that we possibly can, and to also process everything, and turn it around in a very short period of time.
And that's why we work so well together, because one of the things that we, specifically, my team,
yes, sir,
we strive to do is excellence in setting those expectations and communication and getting all of that in front of us, so we can say, listen, this is where we see this going. This is what we need. This is what we expect, and then act on that.
Agreed. And what you've experienced already, especially working with Rebecca, who I have a history with her before we met.
We'll bring her on here at some point.
I'd love to, because she's always fun, and it's nice to work with people that what you're walking into.
Yeah.
Expectations set, and same thing with delivered. So when she sends a client to me to review, we'll get everything done quickly, and a pre-approval is delivered just as quickly as possible. But in my world, I'm not comfortable just pulling credit on somebody and then just taking what they say is their income without doing some verification.
Because people sometimes truly don't know. They have an idea in their head. I make $100,000 a year. But that's not true on paper, because you might be deducting insurance and taxes or whatever. But are they 1099? Like, do they what's their tax bracket like? What do they actually claim? Because if you're an S corp or an LLC or whatever, you might make $100,000, but you might have business expenses that you write off that you don't claim all of that. But you have to go off of what they actually claim. So it's important to know, because some people just don't know, and it's not that they're acting a certain way. They just in their head, I made $100,000 last year. Well, yeah, but you're when you filed your taxes, you only claimed 50,000 of that. It's like, oh, well, yeah, but I made 100,000. So you kind of have to know, and some people just don't understand the process. And I think it's important that we in the industry are able to kind of educate them and make sure, listen, this is what's going to be the case. This is what we're going to have to do. This is how we're going to have to look at this, so that they know, excuse me, going every time, every podcast, I have the cleared throat thing. I can't avoid it. Maybe I should bring some water in.
I thought it would be me.
But so that they know the process and they have those expectations, because hurdles are a lot easier to jump if you know that there's a hurdle coming up. If you don't know and you're just running full speed ahead and nobody tells you, hey, there's a hurdle coming up, you might trip, and it's going to cause some problems, and then you're going to be upset. But let's talk about that hurdle ahead of time, so that we can clear that and keep going in the race.
I couldn't said it better. I couldn't. What you're saying is so much of what I preach to people all the time, and no disrespect to borrowers, but most just do not really know what they make. Now, to clarify, the reason that they don't always know what they make, again, building on what you just said, they may be factoring in bonus. They may be factoring overtime.
Sure.
They may be factoring in shift differential. There's so many things they may factor in. Well, there's something called loan guidelines. Those are set forth by the government.
Sure.
We have to abide by. So until we get deep enough into the income to know, is it regular? Does it have a 3-year continuance in certain specific cases? which would be things like, alimony, child support, things like that.
Sure.
I mean, you have to know these things.
Yeah.
And we don't expect a borrower to know that.
Well,
that's what we do.
And that's the big thing. Like, we sell a lot of homes every year. We see this process over and over and over and over, and so we know what to expect. The average homeowner, I mean, you buy a house, and right now, generally, you're going to live in it for 7 to 10 years. Actually, we're pushing closer to the 11, 12 year range now. People are staying in their homes longer. So if this is something you only do once every 10-ish years, the process has probably changed at least a little bit.
It
so
does.
I don't expect you to know 100% of what's going on. That's why I'm here. I'm here to help you with the process.
We do this for a living.
Right.
That's what I say.
100%.
We do it for a living. So we have to earn the consumer's trust, obviously. It's somewhere in the conversation or through people that, as I say, know, like, and trust us.
Yeah.
Well, there's a reason that you know, like, and trust us. We've been in the trenches together. We've done things to where we've solved problems together. We've relied on each other to take care of the number one thing, which is the client.
Yep.
So we do serve them to get them to the day that they can actually take possession of that home that they've worked so hard for,
100%.
that they've risked money on, in their opinion, a lot of ways.
Yep.
Now, we know it's not really a risk, but it's a feeling that people do have.
I mean, if you're putting $500 down for an inspection and a CL 100 and all of these things, you want to know that you're in good hands.
Yes.
To move forward to procure that property. Jeff, I'm sorry, man, we got to wrap it up, but
fun.
We could talk forever about this.
You and me, yes, sir.
So we'll have to have you on again sometime.
I'd love it.
But
it's a pleasure.
I appreciate you
me.
coming out,
Thanks,
guys.
Jordan.
Thanks for joining us on the Green Arc Properties at Keller Williams Greenville Central podcast. We hope to see you next time, and we'll talk to you then.